Started on the other side here. All right, so we're live. Okay, cool. All right, trying to make sure I can actually get a little eyes on that on the YouTube side. What's good, everybody? Hope everybody had a great weekend. All right. So let me get us launched off here. Get that popping. All right, so welcome to GamePlan Sunday. Today is October 18, 2020. We're going to take a look at the markets, what occurred over the past week, what we noticed coming down the pipeline, and utilize that information to come up with some strategies to make some money in the markets this week. A lot to cover here. We did miss last week, had a lot of things going on, so I definitely couldn't even make it, but I'm glad you guys are here with me today, so totally appreciate it. Today, we talk about what's going on in the market. What was everything like last week? I mean, pretty much the market is pretty choppy, as you guys can see. Let's take a look at the indexes here. Right here on the chart, the market is pretty choppy, right? But it's looking like it's kind of forming a double top, so it's a little tricky, okay? And we talked about this for the prior weeks, of how as we get closer to the election, you know, it's about to get real crazy, you know, strong ups and downs, and it's more of a day trading market than anything right now, because nothing is really moving off of fundamentals. A lot of hype, a lot of news story, because the economy itself, there's lots of distortions that's happening with the economy that's also taking place in the market, right? So let's see what we can come up with that information. Just take a look here on the website, WallStreetJackboys.com. If you haven't subscribed, make sure you do. But here on the website, got the events page. Every day I'm just here checking it out, of course, dropping new articles so you guys can check it out. Everybody can participate, you know. And so we'll just go through our list here, what we saw happen the past week, starting with the economic releases. And also we did have Amazon, we had Apple, you know, they kind of, you know, try to keep things up, but they really didn't buzz the market, not at all, with their products and everything. The markets really wasn't moving much. So, you know, we was watching it live as it was going down. As far as the economic releases, we did get the CPI numbers that came out. As you guys can see, posted right here on the website with the CPI numbers. Let's go to red here. Basically, CPI, that's the consumer price index. That's basically the measure for inflation. Increase, you know, basically it says 2%, rising 0.4%. What else? Over the last, all items index increased 1.4%. Interesting thing is that they were noting that the index for used cars and trucks continue to rise sharply. So people are buying a lot of used cars, more than normal. And they also talk about how energy rose, natural gas increased. When it's further details about the index for used cars and trucks, it rose 6.7% in September, its largest monthly increase since February 1969. So obviously we're seeing some distortions, things that are not natural in the economy for it to move this way. For some odd reason, we can observe that people are buying used cars, not new cars, but used cars. And that's more than likely not a Tesla. But you're seeing a lot of that that's happening, and you're trying to figure out, like, well, why is that happening? Why are people, you know, buying up, you know, these cars? As they buy, the prices of them are going up. It's causing this inflation thing to take place. And it's probably from, you know, people migrating out of, you know, big cities, you know, like New York, you know, and you know, San Francisco, what have you, big cities where they normally wouldn't need to have a car. But you got to remember, we got the real estate market that's booming down, you know, where we are, right? You have an exodus in New York, right? People moving away from there, but people are moving more down here, or, you know, other places that's not so congested. And along with that, I believe that we're seeing the increase in used cars, because now you need a car when you move down south. You got to have a car down here. You can't just be Ubering around everywhere. You kind of, things are so spaced out, right? So for the most part, most people have cars. And so I'm thinking that that's probably the reason why we're seeing the inflation increase in that. But overall, we are seeing some inflation to move up, as we can see overall. But remember, this is what the Feds want. The Feds want to create inflation. That means that people are spending money. So you got to get it to the point where people are spending and comfortable with spending money again. The truth doesn't really matter anymore. The only truth that matters is the truth that the people believe. That's a quote. You take that down. The objective truth doesn't matter. It's whatever the truth that people that people believe in is what matters, right? So people believe that the economy is great, or people believe there's a vaccine around the corner. If they believe these things, then they behave, differently. It doesn't matter if it's true or not. That's just pretty much what it is. And so I think that that's really interesting. Also, we caught the PPI numbers. Again, this is the producers. Their indexes are also inflated, as you can see. Advances 4%. Final demand prices rose 0.3%. Prices for final demand goods also moved up 0.4%. And then you got a nice little chart that you can pretty much gauge. Really didn't move too much, but you can see how, over the 12-month percentage change, you can see how it changed. So we are seeing some things start to inflate. It's starting, we're seeing that. So we got that. And also, this was the unemployment numbers. Let me actually just zoom in on this a little more. And I know Ron said he wanted to see this one here. And again, this is right on the website, so you guys can check it out yourself, straight from the source. Well, the unemployment numbers, initial claims were 898,000, which is an increase of 53,000 from the previous week's revised level. So remember, last week levels were wrong. Remember, they had to revise them up. It tells you right here that they revised them up by 5,000. So they revised those up by 5,000. And then this is 53,000 more than the revised up number. So 898,000, which was definitely far exceeding what analysts' expectations were that the numbers were going to be. This is not a move in the positive direction. This is really not good to see this amount of people, unemployed. So now things are going into the wrong direction. Okay. So we're seeing that's starting to happen now. And, again, when the whole thing is trying to get that curve down, but then they got flat here, right? They're trying to get it way back down here, but we're still elevated up here, and it's just stagnating, right? And now it's starting to look like it's starting to reverse back up. That's what they do not want to happen. But that's the direction we're going, right? So that is not a good sign for the markets. All right. It's not a good sign for anybody, right? So, I mean, again, it's harder for people to get jobs in the job market, all that, right? So that is really not good. Also, we got a nice little update from our man, Ron, OG Ron. He's been talking about this drone exposure. Anybody trying to, get some exposure in drones, or if you're trying to, put some money, make some money off the drone booming industry right now, he got a nice list here. I actually put it together in our Thinkorswim platform. I shared with you guys. But everybody give Ron a shout out for doing homework. Every day is homework. You feel me? So I appreciate when you see people working, trying to figure it all out, because I don't know it all. This stuff is so massive and convoluted. It's crazy. That's why you see a lot of people have teams and, analysts, teams of these guys is out here getting these insights, So again, this is community Wall Street Jack Boys. When I built the website and I built the platform, is so that you guys can have that community structure going on. So definitely, whatever you guys know, share it with your comrades. All right. Also, he posted a couple of other articles right here in the news feed. You guys can do the same thing. But he's talking about the drones, basically. So drone delivery about to be a big thing. The whole key is to try to get in advance. So again, shout out to Ron for that. This is a little article I posted here from Gold Money. It's talking about hyperinflation. Again, you guys can go right here, check it out. And the argument here is that hyperinflation is already here, right? So what we were just discussing here about the CPI and the PPI numbers is about inflation. Here we're talking about hyperinflation, which you really don't want to happen. I mean, this is terrible. But this is what they say the definition of hyperinflation is. Hyperinflation is the condition whereby monetary authorities accelerate the expansion of the quantity of money to the point where it proves impossible for them to regain control. It ends when the state's fiat currency is finally worthless. It is an evolving crisis, not just a climactic event. Okay, so here you go. You're talking about basically the Federal Reserve, right? The central bank is the central government. Excuse me, the central bankers, they lose control over the manipulation that they're doing right now on the economy, right? So again, the manipulation is causing the distortions, and they're trying to create this inflation. And what they're saying is that basically everybody has the definition of hyperinflation wrong. They're basically saying the definition is that they can't control it. So this is an interesting article. If you want to know more about it, just go to the site, click on it. I thought that's pretty interesting. Also, we got this from this report here from the IMF this week, also talking about the World Economic Outlook. They had these projections in there. And in their projections, what was interesting is that they're talking about how all of the countries out there, out of all the countries, no country has positive growth outlook except for China. China's the only country on this whole map, right, that has a positive growth projection, right? So you guys can see that right here, 1.9. And here we are in America, negative 4.3. Again, you're talking about utter destruction of capital here. You know, this is what's going on right now. So again, you have the stock market booming, but the economy is suffering. And this is why there's such a huge demand for a stimulus. Now, they're going to have a stimulus, okay? There's going to be a stimulus. Nobody has the balls to not provide a stimulus. What's happening is that you had this election season here, and a lot of things are being politicized, and everything is weaponized, right? Even Ray Dalio was talking about it way before this stuff even happened, how everything was going to play out, and everything is playing out according to the plan. All right. And what it is that, you know, you're looking at utter destruction. And you got to remember, America, I'm an American, so I'm definitely pro-American here, right? But when you take a look at the data, as we've been seeing, this is just not good. It's catastrophic, you know, and China is actually the only country on the map that's booming. So I actually was listening to the chief economist of the World Bank, and she was talking about, actually, she was being pressed a little bit, and it was saying how China, their economy is, you know, if they're doing so good, why they're not trying to help all these countries. What they're saying is that a lot of these, what's catastrophic is that these other countries, you know, outside of, you know, the major countries like America and China, the other countries are suffering terribly, terribly, terribly bad, and that they need to do something about it. And they're talking about basically debt forgiveness. This, you know, let's just wipe everybody's debts clean. We talked about this in the Bible, how the Bible has this year of Jubilee. This stuff goes back to biblical days. So the Bible talks about year of Jubilee, where it's this reset every, you know, what is the Sabbath of the Sabbaths, right? So every 50 years, basically, that's what was happening in the Bible. And even Ray Dalio was talking about like, hey, we're at that point. And I posted on my page, on my Facebook page, I was telling people how, you know, the World Economic Forum, they already had this event called the Great Reset that's happening next year in January, right? Whoever the president is, doesn't even matter. They're already moving towards figuring out how we're going to be able to move forward as a whole society. And you have this group of people who are, you know, politicians, businessmen, all alike. They are trying to centrally plan how everything is going to play out going forward, because they pretty much had to destroy this system and restart a new one. I mean, there's no way they can continue to have this going. So as I was listening to the World Bank analyst, she was saying that the economist, she was saying how China basically are not doing enough to help all these other countries out. And these other countries, they have their debts are just out of here. There's no coming back. And they need for the bigger countries to basically, you know, help these smaller countries out. And they're saying China's not doing enough, basically. And then Christine Lagarde, you know, who's the head of the ECB now, she was saying how that basically they need more stimulus. Now, normally the IMF, World Bank, all these people are really watching deficits and things of that nature. And so they really try to be financially, you know, fiscally responsible. But now they're saying like, the hell with it. We need stimulus. So everybody and their mother is screaming stimulus. You got the IMF, everybody's like, yo, we got to make this happen. You know, this is a global disaster here, right? It's not just America, right? we're still at the cream of the crop, believe it or not. And these other countries are suffering. And so anyway, that was interesting because it was pressed like, hey, well, that's normally not the speech from you guys. Why the shift and change talking about providing all the stimulus to these, countries and debt forgiveness. And the analyst or the economist, she was saying that, in this type of situation that we in now, basically anything goes. It doesn't matter. All that theory and economic stuff, they don't care. They just want to try to ease people's pains. And so the whole key is to try to prevent people from going through pain, try to interfere in the economy and try to provide what you think is help. And as we see right now, that's not even working, not even in the US. So that's why we calling for a second round of stimulus, even bigger than the prior ones, the biggest ever in history. Trump says go big or go home, right? So we're still trying to put, more into it, but understand it's still causing utter destruction. So it's like their medicine is not even working, but they believe it's going to work. And that was the call for the whole hyperinflation situation we was talking about, which would definitely be catastrophic. And again, destruction of the dollar itself. All right. So again, I just wanted to bring it to your attention because this is what the world leaders are talking about. And my projection on this is that they're going to have to reset this whole thing. All right. It's a mess. Also, this is a cool little report that showed up driverless cars on the road. You can click on this on the website, check it out. But looks like driverless cars are going to be on the road. And so that's interesting because I think that you do have and GM is basically over this company here. And but that's interesting, right? We already the whole hype over the past 2 weeks has been electric vehicles, Tesla, Neo, Nikola, all these companies, people trying to pour into them. And so it's gonna be interesting to see these autonomous vehicles on the road, and they're not, 100% safe. So, but this is where we are going at with driverless cars and things of that nature, which brings me to this whole situation here, where this is a Barron's article. And I posted in here, Wall Street flipping on Trump. Okay. So again, we got an election here in 2 weeks. Okay. And I don't know if you guys have voted, but again, that's your civil, that's your civil right that you have is to vote. So you may want to go do that. But I was able to do so with my daughter, her first time doing so. And that was interesting. Early voting where I was at was actually pretty light. I didn't have to wait in long line. So I was happy about that. So anyway, let's actually dive into this article real quick, where it appears that the nature of Wall Street is shifting on Trump. This is interesting. I don't know what way you voting or who you believe. I don't really care. I'm just telling you what I see, fundamentally, and all these other things. Is that you would have thought that Wall Street would be fully backing Trump, but it looks like Wall Street has found a way around Trump that they obviously believe is better. So this little article, I'm gonna go over it quickly. It said, whatever warning it might have gotten from the Trump team, Wall Street is lining up solidly behind Joe Biden based on campaign contributions. So they're looking at who's contributing to which campaign. That's from how they coming up with this, right? So big Wall Street money is going on Joe Biden, right? And let me see here. This analyst says, some analysts say it's simply a matter of backing a winner. Others say a Biden presidency will be more stable and predictable with a moderate trade policy and huge stimulus in early 2021. But that seemingly overlooks the looming tax hikes. Okay. He warns in a client note with the last sentence emphasized in boldface italics. Okay. So again, they're looking at trade policies and huge stimulus. Trade policies, huge stimulus. Okay. The negative thing is going to be the tax hikes. We'll talk about that here in a second. Various projections point to a significant, possibly economic slowdown in 2022 when Biden tax increases would be expected to hit. He continues, a Democratic admin probably would defer tax hikes while the economy still looks weak. So they're probably going to pass them over the years where they're not going to have to pay them that year. They're going to just, defer them. But the big economic impact will come in 2022 after the stimulus sugar high has receded. So they're projecting a stimulus sugar high, and then that's going to recede in 2022. Now, corporate taxes would see the biggest impact, rising to 28% from 21% with a 15% minimum tax and other business levies under the Biden plan. individual making of over 400,000 would see significant tax hits, with wealthy Americans also facing increased estate and social security levies and caps on itemized deductions. Biden also has proposed taxing capital gains. For you guys that's here, you trading stocks. That means you're going to have to pay more money on your capital gains. As ordinary income for high earners, huge factor that could lead to cashing in gains before the effective date. Okay, this all presumes that a blue wave sweeps Democrats into control of the Senate along with the House of Representatives. So basically, they have done different analysis. Okay, you guys know I have a financial analyst designation. I've run these financial models. It's really interesting stuff. I'm doing machine learning right now. Again, y'all know I be on my nerd stuff. But when we're running these analysis, we run what's called scenario analysis. And in our scenario analysis, we run bullish case scenarios, bearish case scenarios, neutral case scenarios, all these different scenarios that we can just hit a button and it'll flip all the numbers for us. Obviously, okay, Wall Street, they're analysts who are far better than I am. I'm just a baby, okay? Now, these guys are, experts. Now, they've already done their analysis, and they priced in all these different scenarios. If it's a Biden victory, a clean sweep with Democrats taking the Senate and the House, they've done it with Republicans keep the Senate, and in the House maintain the Democrats maintain the House. They've done all these different scenarios. And then, of course, they've done the Trump scenarios. Obviously, the insights that they're gathering from this data, they have figured out that, okay, the tax situation is just one thing, but stimulus, the amount of stimulus that the Democrats is going to provide, you got to understand the stimulus itself is going to go to corporations. All right. They say it goes to people, but you remember they want to give it to you so that you can actually turn around and spend it with the corporations so they can make money. So corporations is trying to figure out how to line their pockets. And so you got that. And then also you have the tariffs, and those tariffs has negatively impacted, businesses that depend on products from overseas, in particular China with the trade deal, where pretty much everything in your house comes from China. So companies like Walmart or whoever else the case may be, Amazon, whoever, they're getting these things from China anyway. So they're having to pay, although they got a corporate tax cuts, but the product itself is being tariffed, right? And that's because Trump, his strategy was to try to get these companies to come back to America, right? It's like, why are y'all hiring people overseas when you can have those jobs to people in America, right? So that was a strategy to just try to force them into submission until they come back to America. That was a strategy. But the American companies, they don't like that, right? And so he helped them out with the corporate tax, but at the same time, they get smacked up with the tariffs. And so they don't like that. So I think that with their analysis that they are actually seeing that they would prefer a Biden victory over a Trump victory. And another thing is because the Democrats are going to give a bigger stimulus than Trump, right? They're going to give a bigger stimulus. Nobody cares about the future. This is all for short-term, benefit gain. All right. And that's what everybody's looking for. The long term, again, nobody's talking about, the outcome of, all this deficit spending. Where's it going to come from? Back to the conversation that we had about the IMF and the World Bank, they were talking about how they have to, around the world, they're going to have to tax the corporations and the rich to take care of the poor countries or whoever the poor is supposed to be, whatever. The taxes have to go up. I mean, that's just bottom line. People are crying for stimulus, begging for help. And the only way you can get it is that you have to get it from somewhere. Government doesn't make money. So government is definitely coming at the, rich. If you got money, they're coming for that. Corporations, business owners, whatever, you're going to get it, right? Because that's how you socialize economies. You have to take from the rich to give to the poor. This is when Ray Dalio was talking about the haves and the have-nots, the bourgeoisie versus the proletariats, right? And this is why we talk about these. We have these debates about socialism and capitalism, because this is the time we're closer than ever. Okay. And all roads seem as if we're going socialism. Okay. That's where things are going, and again, it's been debunked several times throughout history, but we're at that time where everything is politicized. Everybody want to seem as it good. And that's a subjective value, subjective. So anyway, but that's just my take on it. I believe that's where we're going at. Again, the odds, Trump is an underdog in this situation. The odds are against him. He was, again, the numbers in the polls were against him, against Hillary. But this is a whole different shift that I don't know if he can make it back from this one, because he got a lot of powers that's against him. In particular, you got Silicon Valley that's really, really against him, because for them, they want to be able to control the economy, but they feel like they can actually, when I say control, meaning they can socially engineer an economy because of all the data science that we have. So they're critical in this whole one world order situation, a cashless society. Everything is digital. Who's controlling the digital atmosphere? Right now, you can't even speak freely on your YouTube or your Facebook because it's being controlled by those people. And it's crazy is that because even this week, Twitter even shut down, trying to hide this whole story about Biden's son. We had this computer and all his personal information is on there. He, I guess computer messed up and went to go get it fixed, but he never picked it up. He never claimed the computer. The guy was reaching out. Nobody ever picked it up. So now it's the guy's property. The guy opens the computer up, digs into it, find out that it's Joe Biden's son's computer. Got all his personal business, all this, money stuff he'd been dealing with China. And so that was a big story that was coming out, and it got suppressed. The Twitter started banning people's pages and actually complete shutdown, actually. And that was really interesting that they would do that just to try to suppress a story. It's just crazy. And then they later apologized. Twitter and Facebook, they later apologized. So those are things that are happening in real time. And that type of behavior, again, is, fascist socialism, because somebody's good and somebody else is bad, just because who gets to say what's your good, what's your bad, right? And, anyway, it's crazy. You guys really have to look into it. But I want to talk about it because that's what was going on. So those are all the things I have captured on the news feed here, right here on the website. Make sure you guys, chime in. I want to know what you guys feel about it. Tell me how you guys feel about it. All right. All right. To the money. Back to the markets. The ES. All right. Again, we can see not much movement here, right? Actually slightly came down. And, that's what you have right there, right? We had this top, which is the last high, and we got rejected at this high right here. We never made a new high. I don't know if we'll make a new high. So that really interesting situation that we're in right now. So don't know if we're going to get that, but we do have earnings that's in play. And so we'll see if earnings can take us back to the top again. Now, it seemed as if, Wall Street has learned in the past that if they sell off, they would get some kind of, aid. They'll get stimulus. When they get sell-offs like this, they get stimulus. Well, being up this high, I think that, this whole stimulus talk stuff has been just delayed. Nobody really cares because it's not showing in the stock market world, although the economy itself is just in chaos. But the stock market is still up, and so that pain is not there. And so for me, I think that my projection that I was actually thinking was going to happen is that we were going to come back down to these levels, and that's not happening. We came back down a little bit, but then we rose back up. And again, they're analysts. These are data scientists. They are crafty with the data. And so they have obviously seen something in the data. You remember when Trump caught the Rona, the markets did not sell off. That was a telltale sign, right? If the markets are supporting Trump, when he caught the Rona, that's possible death. The markets should have sold off. The markets did not sell off. The trend is still intact. So for me, that's where I'm at with this. So I think that they're all pretty much working against Trump on that. I don't know if you know that or not, but that's just what it's looking like. All right. Also, we had gold that's chopping around. Okay. We have gold that's chopping around here. As you guys can see, gold has been chopping around here, holding up against the 100 moving average, right? That's the 100 moving average right there. Still holding up. Now, gold was going to take off. Well, I was expecting gold to take off. Our projections of gold was going to take off right here, all right? I was expecting gold to take off right here based off of stimulus being passed. Stimulus passes, inflation will be upon you, right? Because people are going to be getting money. People are going to be spending money. So the projection was that, but we never got it. So there was a rejection. Gold came down to this tier, which is this floor, which is a better buy point, okay? And gold is still chopping around here. And again, I don't know if we're really going to get a rally on this until stimulus gets passed. So I don't have, like, again, gold hits this 100 moving average, that is a buy zone, okay? If it comes down again, which could be this week at this zone, is another buy zone, right? But I don't see, anything else beyond that as far as triggers to get in on this. All right. So I think that gold, we may get more pressure on this to come down some more. All right. Also, what else do we have? The bonds. Okay. Let's take a look at the bonds here. The bonds are still chopping around, going down here. And the bonds have been messed up, right? So look at the bonds. They caught that slack here. They held at this 200 moving average. They're still holding, but they're squeezing. The breadth is narrowing. So bonds is going to have to make a decision. Is it going to go up? It's going to go down, right? Bonds are going to have to make a decision. But what I have been seeing is that investors have been shifting into utilities, which is like a proxy for bonds for safety. So if you go to XLU, you'll see the inverse of what we were just showing you on the bonds chart. So this is where money has been flowing to, since again, bonds, there's no yield there. Okay, interest rates are suppressed at zero. You're not making no money. And you got investors that's going crazy, trading all these tech stocks who stock prices don't even match their fundamentals. I mean, it's totally distorted. And so it makes it a very treacherous territory to be trading in. But you're seeing some smart money that's coming over here into bonds. So not bonds, but utilities. And so you got that pop in there, really nice continuation in here, bouncing back here. And I think we're going to get some more continuation on this, right? So that's another development for you guys to keep your eyes on. As we speak right now, the futures are up. Let's take a look at the Nasdaq. The ES we already took a look at. The Nasdaq, which is the tech indexes. Okay, the same thing, got that rejection up here and it's coming down. Momentum is slowing down, but the trend is still intact. All right. And with earnings, I think we'll see, how earnings play out. Again, a lot of these mom and pop stores crushed. The big boys, they have been direct beneficiaries of all this stimulus, all of this, Federal Reserve, people jumping in the game when they should not be doing so. They are beneficiaries of it. And so everybody's shopping at the Walmarts and the Amazons and things like that, where otherwise they wouldn't be getting all this kind of boom business, right? And so when you think about when they pass stimulus, where are people going to spend the money? So wherever people are going to spend the money, you have to make that kind of projection of where people are going to spend the money at, because that's where you want to be at in the stock market. You want to actually be a beneficiary of that in the stock market world. So you have to think about that. And so I think that a good homework assignment for you guys, because again, I've been busy this past week, but a good homework assignment, I think, will be to come up with a good list of stocks that will benefit from a Biden victory. Doesn't mean Biden is going to win, but I think that you should prepare your portfolio for a Biden victory. And we were just talking earlier about the electric vehicles and things of that nature. So one of the top things that come to mind is that the Democrats' platform is really a lot. They talk about the importance of clean, clean economy, right? And so you think about that climate change is major on their agenda. And so for a Biden victory, climate change stocks or, companies that are climate change sensitive, meaning that that's what their platform is about, they're going to benefit from it. I think that's why I saw a lot of movement in Tesla, right? All this movement in Tesla, which again, Tesla's not looking too well, but I mean, it's looking great right here, but I don't see any bullish movement in it until earnings. So they got earnings coming up this week on the 21st. So, but I think that Tesla is more than just a car company, though. You got to understand. Let me show you guys my, let's see how much time we got. 30. Okay. All right. So I'm going to try to wrap it up here. Take some from you guys. Because I know we already going past the time limit, but like solar stocks, Tesla's also a solar stock company, solar energy. And take a look at this first ticker on this list. Look at this, Jink O Solar. Okay. How many people saw that, right? And this thing was down here at $20. All right. And look at that continuation. Look at that. All the way to $70. I mean, blew through all my levels way back here. All right, blew through all those levels. I mean, this thing is out of here. All right. And so I mean, I think that it's probably going to start to consolidate up here, but look at that. That's crazy. Solar stocks. I think that these companies are good candidates for that type of thing. So this is a list here with those companies, those solar stocks, and they're all looking great. They're all looking great. So that's something you may want to keep on your list. But definitely, I think that it's time to prepare for the possibility of a Biden victory, which I think is highly probable right now. So just keep that in mind. With that being said, I guess I'll take a look at a couple stocks from you guys because we're already pretty heavy right now. So let me actually just kick off with Google. Okay, I think Google is in an interesting situation. We got a little flag that's forming on Google. You can see, flag right there. Okay. So you can see that flag shape, but with the whole autonomous car situation, the GM situation with the car I showed you guys on the website, that's an autonomous car. Google is a leader in that space with the Waymo vehicle. I think that we're getting some boost from that. Okay. In Google. So I think that Google may be a place of interest. And again, you guys can drop your tickers in, whatever you want to take a look at. We'll take a look at those. Excuse me. Also, take a look at EA. I think that EA is forming a like some kind of triple bottom situation here. Let me switch over to the pen here. Like a triple bottom situation right here. When you get that, okay, which this will reflect that coming back up that way. It's in a squeeze right here. We got the trend that's moving upward. And so EA, I think, is going to fare well. We had holiday season. We got the new Xbox and PlayStation consoles. It's going to be dropping here in just a couple of weeks. This company is going to be benefiting from that when kids want to play their video games. Another stock will be your ATVI. Now this is an interesting one here as well. Let's see if I can get my annotation together. All right, so you had this, this bear flag here, and then it's got this rectangle, pop off right here. Center squeeze, earnings is out about 2 weeks here, election time, and so it is chopping around. It's building up some good energy in here. Clearly, you can see the resistance is right here at the 618, right here at the zone here. It got rejected again here, like it's trying to make its way back up. So you may want to take some positions in here for some bullish for a bullish ride. Ideal pickup would be down here at the 100. If it falls, that would be great. That'd be phenomenal. But if not, it's fine. I think that again, it's going to be a beneficiary stock. This is the company that makes Call of Duty. Pretty much most of these kids nowadays, they play Call of Duty. So this, in fact, I think they got a new Call of Duty. I don't know if it's came out yet. It's getting ready to come out. I've been so busy, I haven't played it. And I'm a gamer. I normally know these things, but I don't know when it's coming out. But I know they have a new game that's coming out, new Call of Duty coming out. And so it's got to be relatively soon with the new consoles. But I think that we can bust out of this into new highs. What else? We got, I think, I don't know if it was Ron or Mark was talking about BJ's, probably Ron. And I was saying how BJ's on the fundamentals, they look actually phenomenal. When I was running my financial model on Walmart, one of the companies I had to do a comparison analysis on, again, was BJ's. Fundamentals look phenomenal. And so, for to me, this is a good stock to buy for the long run, just actually buy the stock itself. And other analysts have good buy targets on it as well. But if you take a look at the pattern that we got here, those 100 as a floor here, I can see this double bottom situation pop off in here. Now, I got a squeeze on this thing here, and the trend is moving up. We got buy triggers in here. And I don't know if it was Mark or Ron. It was like, hey, I'm ready for this thing to make a move. So we already got some people that's already in here waiting for this thing to explode here. But again, it's taking its time. But it looks like it's going to be bullish if this is a double bottom. Again, it could switch on us, but it's looking like a double bottom, which is a bullish play. So I do like BJ's for that reason. My man, real estate executive, how you doing, G? Let's get you straight here. All right, Workhorse Group. All right. Obviously been a while since I charted this one. Let me just clear it up a little bit. But obviously you can see the resistance zone here. It's coming down. Again, just taking a look at my non-moving average, which is this red line. When it's red like that, it's letting me know this bearish. Okay, this is changing with the algorithms basically, but it's still bearish. So when price is under the moving average, again, I'm taking a bearish take on it. So I don't have a bullish take on it until price comes above it. This 50 moving average is going to be a key place for this thing to hold. And so, again, what you want to do is wait. You basically want to see if this thing is going to hold this 50 moving average. I think this is a critical place. If you see this thing breach, then you might as well cancel Christmas on that. But if you see it pop up, then I think that that will be a good trigger if you're looking for some long exposure. But the trend itself is down, so that's how I feel about it. Just rocking BJ and JD. Yeah. So again, we talked about. I just showed you guys the economics behind JD, JD.com, these Chinese companies. Again, I showed you guys the only country that is even projected to be positive is China, and China's actually positive right now. And so, if you want to benefit from that, then you got to get some Chinese exposure. JD.com, right? This one here is, a big boy. It's a little elevated, but the trend is still intact. So I don't see no short on this one here. Price is still above its moving averages. The price is still above that 618. So again, I would stay long on that. You got your Alibabas, and then an old favorite of ours is is Jumia. I thought I'd bring this up here. I think Ron had bought this one up. This is an old favorite. It's not a Chinese company, but this is the company that is positioned itself to be the Amazon of Africa. We talked about it when it first dropped, and it had this crazy run up here not too long ago. 2 months ago, and that run up was crazy, and then it got crushed. Now look what it's doing again. It's coming back. All right, it's coming back. And I think that's really interesting. I think that we can get back up to about the $18 mark on this one as well. It is a little overbought, but it's typical in this distorted environment that we're in. If they're going to be a beneficiary of any kind of stimulus, then that's a good move. All right. Somebody says ABT. My man Zay, what's good with you, G? All right. So it's been a while since I did Abbott Laboratories. Well, what's interesting is that this whole vaccine situation, right? So biotech companies, I tend to stay away from. They're not my favorites. But we can see how this thing here has clearly behaved right here in the zone, clearly behaved right here in the zone. It's still holding. So for that reason, I'm bullish on it. But these are so tricky. And this is all going to be news driven based off of this whole vaccine situation. If it clears this, that's a trigger to just, to go long, basically. Now, these biotech stocks, they move crazy. If they turn around talking about they got a vaccine tomorrow, I mean, you probably missed the move. So you may want to start to get yourself positioned in, but keep in mind, they do have earnings coming up, and I believe that's this week. Now, another one instead of this one, you may want to consider Pfizer. All right. So Pfizer, basically, from my understanding, from what I believe I heard here, is that Pfizer, they're actually supposed to be working with some German company on this vaccine. And I think it was Eli Lilly and Johnson, J&J. They pulled back their vaccine trials. I think a couple of people, were, injured, or, the trials didn't go well. So they ended up putting a stop to it. And off of that news, again, you had Pfizer that popped up. It popped up into the 618 right here, as you can see. And, we're here yet to see what it's going to do. It's in a squeeze. Trend is moving up. I like this one better than Abbott. And, this will be a Trump positive stop, because if you guys recall, Trump was saying that I don't know if it was the debate or it was that call. I think it was the debate. He was saying how we're weeks away from a vaccine, and he was saying that basically we're going to have this vaccine before the election. I don't know if he's going to be able to do that or not, or I mean, he's not doing it, but I don't know if Pfizer going to be able to do it or not. But I think that's what the hype is on Pfizer, and Pfizer also has, Pfizer got a lot of momentum building up from that based off of hopes of this vaccine situation. I think they're leading it now since the other ones dropped out. I think, the hope is on Pfizer. So if you're going to, look for those, I think that Pfizer will probably be a better look. So yeah, that's my take on that. Other than that, you guys got anything else? I know we're right here at time, but definitely appreciate you guys showing up. I definitely needed the last week off so I can take care of my son's situation and do a little traveling and things like that. So again, make sure you guys check your email, your inboxes whenever we have the Game Plan Sundays. They are on the website. Again, just check in on the website on a daily basis. You'll see it pop up in a news feed, let you know if there's a Game Plan Sunday. If I cancel, I will send out an email notice to let you guys know. It'll go directly to your inbox. Okay. So if you're not on the email list, make sure you get on the email list or, register to the website. You'll be on the email list once you register to the website, what have you. And so therefore you get the notification. So also you can see what's coming up in the week right here on the events calendar. So just check in on a daily basis. Also join us in the chat room. Shout out to my man, John, Ron, Mark, Courtney. I can't even name everybody, but some of you guys, I see y'all in the chat room on a daily basis. We're in there live cooking it up every single day. So even if there's not a Game Plan Sunday, we're always in the chat room. So just keep that in mind. We dropping them right here in the chat room on the website. So definitely check it out. The chat room is free. Most people charge, $200-$300 a month for their chat rooms. It's actually free. Registration to the website is free. We'd love for you guys to join us and, to get the training. If you don't have the training, you can go to courses and get the training. It's the only thing that you pretty much are paying for. We'll definitely appreciate that. So with that being said, I'll bring this session to a close and then catch you guys in the markets this week. Y'all enjoy the rest of your weekend. All right. Peace.